If you've been watching the Ocean City real estate market, you've probably noticed something that feels a little contradictory right now. There are more homes on the market than we've seen in a while. New listings have been coming on consistently, and yet prices haven't budged much. Days on market are creeping up, but sellers aren't panicking. Buyers aren't exactly flooding in either. So what's actually going on? That's what we're going to walk through today. I've been tracking Ocean City market data for several years now, and I pulled everything through the end of May 2026 so we can take a real numbers-based look at where things stand. We're going to cover current inventory, what's happening with new listings, what buyers are actually doing, where prices are, and maybe most importantly, what that combination means for you, whether you're buying or selling. All right, let's start with the big picture. Inventory. As of the end of May 2026, we had 272 active listings in Ocean City. That's up about 5% from the same point last year, and it's been climbing steadily since February. Now, here's the context that most people miss. 272 sounds like more inventory, and it is, compared to recent history. But if you zoom out to 2019, pre-COVID, we'd routinely see 400, 500, even 600 active listings. So relative to historical norms, we're still in a super supply-constrained market. The shelf is getting more stocked, but it's not fully restocked. Now, the peak we hit in the summer of 2024 was around 276 listings, and we're approaching that level again. That is worth watching. New listings tell us seller confidence. How many people are deciding now is the time to sell? April 2026 was genuinely notable. We had 110 new listings, the best April we've had since 2022 when the market was running hot. That got a lot of sellers off the sidelines. May came in at 92, which is a step back from April, but that's actually normal. May is historically a volatile month, and compared to May of 2024, we're up 14%, so sellers are definitely more active than they were a year ago. Year to date, 2026 new listings are roughly flat compared to 2025, down about 1%, and what that tells you is that we're in a consistent, somewhat elevated new listing environment, not a flood, not a trickle. Now let's look at what buyers are actually doing. In May 2026, 60 contracts were signed. That's up 22% from 49 in May of 2025. Pending contracts are the freshest indicator of buyer demand, and that is actually encouraging for the market. More buyers are pulling the trigger. Now, closed sales came in at 59 for the month. That's down from 68 last May, but closed sales lagged by 4 to 6 weeks, so May closings largely reflect contracts signed in March and April. Now, year-to-date closings are up 3%. The headline: more buyers are going under contract this year than last, but sales volume is looking a little bit more modest. This is a deliberate market. It's not a frenzy. Single-family homes are where the clearest slowdown signal is appearing. The median sale price in May 2026 was essentially $2 million. That's up about 2.6% from a year ago. Price growth, but modest, not the 10 to 20% jumps we saw during COVID. What's more telling is days on market. 61 days up from 48 days same month a year ago. It's a 27% increase in time to sell. Homes are sitting a little bit longer. What's more telling is days on market. 61 days up from 48 days a year ago. That's a 27% increase in time to sell. Homes are sitting longer. Buyers have more time to think, more options to compare, and they're not rushing. Months of inventory for single-family homes is at 6.1, and the general benchmark for a balanced market, where neither buyers nor sellers have a clear advantage, is 5 to 6 months. We're right at that line. If you had told the seller in 2022, when months of inventory was sometimes under 2, that we'd be at 6.1 today, they would not have believed you. For single-family homes, this is the most nuanced segment in the market right now. The condo and townhouse segment tells a slightly different story. Median price came in at essentially $1 million, up about 1.9% year over year. Days on market are 52, also up from 44 last year. Same directional trend as single-family. Things are taking longer. But the key difference is months of inventory, 4.2. That's still in seller's market territory by conventional standards. There are simply fewer condos relative to the number of buyers looking for them. The condo market has more balance, but sellers still have a slight edge. If you're in the condo or townhouse segment, as a buyer or seller, you are in a more active part of the market right now. I track something I call the absorption ratio. It's essentially the number of new listings coming onto the market for every contract signed. A ratio of 1 means every home that lists goes under contract. Below 1 means buyers are absorbing everything and then some. Above 1 means homes are accumulating. Right now, our 1-month ratio is 1.53. Our 6-month rolling average is 1.9. For context, back in 2021 and early 2022, this ratio was consistently close to or below 1. That's how tight the market was. We're not in that market anymore. We're solidly in a range where supply is outpacing demand on a monthly basis. And yet, and this is the most important part, prices are still rising. Modestly, but rising, which tells you something about the nature of this market and the type of buyer active in Ocean City. To put everything in context, here's the long view. In 2000, the average single-family home in Ocean City sold for $355,000. By 2019, after 2 decades, that had grown to $931,000. Then COVID happened. Between 2019 and 2022, single-family prices jumped from $931,000 to $1.84 million. That's a 97% increase in 3 years. Since then, prices have kept rising. More slowly, but rising. 2024, the average came in at $1.93 million for single-family homes and $976,000 for condos. What this tells you is that we're still living in the aftermath of a historic price run. The current market isn't a bubble popping. It's a market trying to find its footing after an extraordinary run. Where inventory normalizes, sellers adjust expectations, and buyers figure out if prices will come to them or if they need to step up. And so far, prices haven't come to buyers in any meaningful way. If you're a buyer right now, here's how I'd frame this market. You have more options than you did 2 or 3 years ago. That's real. The days of seeing a home list on Thursday and losing a bidding war by Saturday are mostly behind us in this market. You have time to think, compare, and get inspections. But if you're waiting for prices to fall significantly, the data doesn't support that as a near-term expectation. Sellers in Ocean City are not distressed. This is a second home vacation market. Most owners don't need to sell. They'll simply take their home off the market before they cut the price in half. The leverage point you do have. Days on market are up. Sellers who have been sitting for 60, 90 days are more willing to negotiate on price typically, on credits, and on timing. That's where patient buyers can find value right now. For condos specifically, there's still enough buyer demand that good properties move. For single-family homes, especially at the higher end, there's more room to have a real negotiation. If you're a seller, the most important thing this data is telling you is that the market will punish overpricing with time on market. In 2021, you could list above market, get multiple offers, and get close to or above asking price. That's not today's market. Today's buyers have options. They're doing their research, and they will simply wait for a better priced home while yours sits. Days on market hit 61 for single family and 52 for condos. Those are the averages for homes that sold. The ones that didn't sell are sitting longer than that. Pricing from the start, not aspirationally, but realistically, is the difference between selling in the spring season and carrying the property through summer. The good news for sellers, prices are still near all-time highs. Demand isn't gone. If you price well and the home shows, you will sell. The market is still very much working for properly priced properties. Let me bring it back to that question I started with. Why does it feel like there's more inventory, but prices aren't dropping? Because the sellers in this market don't need to sell. They're not under financial pressure. And the buyers in this market, when they decide to buy, are buying a lifestyle, a beach community, something they've wanted for years. They're not the most price-sensitive buyers in the world. What the data says is this. The market is rebalancing. It's no longer a pure seller's market, but it hasn't tipped into buyer's market in the traditional sense either. It's something in between, where the outcome is almost entirely determined on one thing: price. Price it right, and this market works. Overprice it, and the calendar becomes your enemy. If you have questions about where a specific property sits in this market, whether you're buying, selling, or just trying to make sense of things, reach out. This is the kind of analysis I do every month, and I'm happy to walk you through it for your specific situation. If you found this useful, subscribe. I put these market updates out monthly, and I try to make them actually worth watching. And if you know someone trying to navigate this market, share this video. The more informed everyone is, the better decisions we all make. Thanks for watching. I'll see you next time.